time now to take a look at your money. So far this year, the stock market has taken investors on a roller coaster ride. In early April, investors held their breath as the S&P 500 fell by nearly 20%. The Nasdaq stock index, which contains the stocks of many tech giants like Nvidia, Microsoft, Apple, and Amazon, lost nearly a quarter of its value. But over the past 4 months, the stock market has rebounded to new all-time highs. And financial advisor Mark Gravicheski joining us live off of Zoom to break this down for us. Good morning, Mark.
Morning, Devin. Great to see you again. Happy Monday as always.
Yeah, so we saw this big pullback in the stock market from concerns over President Donald Trump's tariff wars. But what do you think is the main reason the stock market has recovered so quickly?
Well, look, Devin, when President Trump first announced these tariffs, kind of in the earlier phase of his latest administration, many on Wall Street quickly assumed a worst case scenario, that these tariffs would quickly lead to soaring inflation, which would then send the economy into a recession, that corporate earnings would plummet, which would then trigger this mass flood of layoffs. And in April, let's be honest, the stock market simply reflected those fears. But since April, there's more and more data that shows that consumers, businesses, and the economy have processed these tariffs much better than expected. Now, one of the biggest factors behind this rebound, Devin, is that inflation hasn't gone higher. It's actually declined. In January, the consumer price index reported inflation at 3%. Today, it's down to 2.7%. Over the last 5 months of these tariffs, the annual rate of inflation is even lower at just 1.8%. So this rebound is Wall Street kind of, recalculating the impact these tariffs are having or are not having on the economy.
So how are businesses changing the way they operate in light of these tariffs?
Well, remember, Devin, the whole purpose of tariffs is to essentially redirect your spending. For consumers like you and me, instead of buying an item that now costs, 25 or 50% more because of these tariffs, we can buy a similar item either made in the US or from some other country that has a lower tariff. And many companies are doing the same thing. They're adjusting their supply chains to cheaper markets. Right now, Devin, we're in the middle of the April through June second quarter earnings season. And so far, 80% of companies in the S&P 500 have reported earnings that are better than expected. 78% have reported their revenues and their sales are better than expected. Now, there are certainly some individual companies and sectors within the economy that are being disproportionately impacted by these tariffs. But overall, these earnings and revenue numbers, Devin, clearly show that both consumers and businesses are still keeping their pocketbooks open.
Now, what do you think are some of the biggest risks that could force this rebound in the stock market to stall?
Yeah, look, we saw a little bit of this on the second half of last week. Look, without question, these tariffs do have some impact on consumers, the businesses, and the economy. This rebound we're seeing over the last 4 months, again, just reflects that the initial hysteria was likely a bit overdone. But that said, in my opinion, there are two areas of concern that will likely make for, kind of a choppy and volatile stock market in the second half of the year. First is, despite this evidence of lower inflation, the U.S. Federal Reserve remains hesitant to further lower interest rates. And the longer that interest rates remain high, the longer it acts as a weight on the U.S. economy. And second, even though the labor market is, still kind of fairly strong, it does continue to gradually weaken. And both of these issues came up a weakening labor market, high interest rates last week. And that's why I think we saw that, a bit of a stock market pullback last Wednesday, Thursday, and Friday.
All right, we know it's going to stay in the headlines. Thank you so much, Mark.
Hey, great to see you again, Devin. Take care. Enjoy the rest of your week.
Same for you.